All right, what's going on, guys? Welcome back to a new recap. Welcome back to a new trade recap. In today's day or trading session, we did not take anything because there's just nothing worth taking, honestly. Coming into the day here, I was bearish coming into today, and the reason why I was bearish is because we had equal lows that got put in London, right? So when I saw the equal lows get put in London, I was like, all right, like that's most likely the objective for New York session. So again, but what made me doubt is that ES ended up SMTing it overnight. So like this made me have a little bit of a doubt that maybe we won't go there. But again, we still had another pair of equal lows here. And that just still made me even more confident, right? So coming into the day here, let me just kind of go on replay mode before like just market opens, just to show you guys like the analysis and what was going on in my mind and how I wanted to approach the trading day, you know? So let's take a look here. All right, replay's just not working, so we're just gonna. So again, 9:30 ends up opening here again. So what ends up happening at 9:30? We inverse this 30-minute gap, so meaning we should go to this low down here, this intermediate term low, and that is a low inside of this hourly gap. Okay, so again, we ended up going. We create a high, low, higher high, lower low, form this bearish breaker. 9:30 opens higher, puts in this bearish SMT initially. Boom. Okay, so I'm like, all right, if we're bearish here, this SMT should hold. And again, literally 9:30 opened higher immediately, guys. Like no wick, no nothing. So I'm like, all right, like this is the New York reversal. Like we're gonna fall. Like this is beautiful, bro. What is going on with my trading view? What is happening? Let me just close this. Okay, let me just kind of reopen this. My bad, guys. It's like a little slow here. All right. So 9:30 opens higher, put in the SMT, and I was looking for a 1 minute for IFEG, but I didn't get it. So I did hop on the 30-second, but again, I didn't enter the trade for two reasons. For three reasons. One of them being because I don't trade the 30-second chart, even though this was so high confluences that I was willing to take it. But the second reason was because the risk didn't align to what I wanted to, like the risk didn't make sense to what I wanted to take. So I couldn't align risk correctly either, and the inversion happened too deep, and then we took out. It would have been a break-even trade right away, so I just didn't think it was worth it. So I didn't take anything here. Then price ended up going lower. We put in this SMT inside of this 15-minute, and I was like, okay, like I'm not bullish though. Like we just created this protected high, like we create this SMT here inside of this dealing range, like. And there's no clean displacement like on the 30-minute or the hourly. Like we're wicking this. This is a wick and a wick. Like no true displacement. If we would have like a freaking like body that's literally bullish here, and then this 15-minute range, like I'd be like, all right, like low, high, lower, low, higher, high, big displacement. But like we're like consolidating here. So I was like, damn, like I don't know if I'm really bullish here. If we would have closed a little higher with more displacement, then I would have been bullish, but I just wasn't convinced. And especially with the SMT at the high and equal lows at the lows. And again, the higher time frame here, the hourly, we had equilibrium of the dealing range. I was like, nah, like I want to see shorts until we get true displacement. After the SMT ended up getting put in, we ended up closing and going to this high. So I was like, all right, cool. Now we have buy side liquidity here, and we closed above it. So I'm like, damn, all right. Like now, what did I learn from my past? If you guys watch my trade recaps, you guys will see that I've been improving. And what did I say? I was like, if we close above a high from now on, like, and 9:30, there's a reason why we're closing above it. Like, there's context. Like, not just a random close above of a high. Like, if we have 9:30 opening lower and it's sponsored, we have an SMT and it's protected, like this low here, we open higher, SMT, now we go lower, SMT, and then we inverse and we go higher again. So it's like, all right, are we bullish or are we bearish? We're bullish. So how do I know if we're bearish again? Why do I think we're bullish? Because this low is most likely a protected low, because 9:30 open higher, put in the protected high, so this should be a protected high. But now, again, and we shift the structure to the downside, so I'm like, okay, like this is bearish. And now we go lower, put in a bullish SMT that ends up holding, and then now we're disrespecting lower time frame bullish PD arrays. So it's like, okay, like, do I want a long? No, because we have a protected high and we have a protected low. So it's like, how am I gonna long this? Like, I'm bearish. Like, this should be a protected high. Like, we have equal lows. We have low resistance. Like, equal lows are literally hanging right here, and equal lows here, and there's a protected high and a protected low. I don't want to long this because it's lower probability. So I was like, okay, like, I'm not gonna long this. I'm bearish, and I have higher time frame bearish periods. And again, on top of that, the 30-minute inverse to the downside. I know the 15-minute is holding in a discount of the dealing range, but there's no true displacement. Higher time frame is against us. 930 is opening higher, bearish SMT, and we have a market structure shift in structure. Look at this, 5-minute close below. So we have a market structure shift. Until we have a change in state to delivery to the upside, this is a low probability trade. So I didn't take this. Boom, we displace above, close above the high. So now this shows true displacement that we're bullish. So we have a protected low, we close above these highs. Now we have a low, high, lower low, higher high, validating a bullish breaker at 930, right? So again, you want to look at it this way: low, high, lower low, higher high. That is your bullish breaker, close above on the 5-minute time frame. So I'm like, okay, like, I will not be bearish here. In order for me to be bearish, I need to see a close below the 930 low, and then I can catch continuation shorts, right? Because now I know there's a shift in structure and there's a clear direction. Taking a short here, again, I fell for this shit, bro, like so many times, where I'm like, it could work, but this is like top ticking to me with my edge, and this doesn't make sense. So I feel like I feel like I am the best trader when I'm providing context, and I'm trying to understand why price should go somewhere. Why should it go higher? Why should it go lower? And why am I entering this trade? And then I'm going to say, okay, now after I believe why it should go higher, now I need my set of rules. I need my range. I need my equilibrium. I need a higher time frame. I need my sweep, and I need an inversion. Because now I have everything in order of why I should take the trade. So you find context first, and then you follow your set of rules, right? So again, my drawn liquidity was short. Again, once we closed above, I was like, all right, like, this 2-minute doesn't make sense. Like, if this 2-minute ends up delivering, it's okay, because I'll just catch continuation. And if I don't catch a continuation, I'm okay with that, because last week what ended up happening, we ended up closing above on the 5-minute, on the 1 hour, and the 4 hour. I know we wicked on the 15-minute. I know, I know this, but I just didn't like it. I did not like, again, we closed on the 15-minute, but on the 5-minute we validated and closed above. If we didn't, we wouldn't have closed above here and got the 2-minute, then I would have been like, all right, like, this is more high probable because we failed to displace higher. We closed back in the range, and now we can't have a high, low, higher, high, lower, low, and this could go lower again, because now this is validating bearish price action. So again, what did price end up doing? Again, we ended up failing. This low, again, we came below 930 here. And what did we do? Again, this low took these highs. This should be a protected low. So what are we tapping into? The rejection block below 930 open. And then, boom, we took the high. So again, now what happened? This low took this high. What ended up happening? Boom, rejection block. And now we put in the SMT. And again, we're just going to go sideways, right? Because the market is indecisive, right? The market, and another thing I'm going to talk about too, like in this video, is the market doesn't like uncertainty. The market hates uncertainty. The reason being is when the market is uncertain, it's trying to print the uncertainty. So that's what consolidation is. It's the market being uncertain and creating a lot of orders, right? Gathering money. And this is why the market is perfectly imperfect. I was literally digging into this, and I was thinking about like the market on my way to work, and I was just like how come we all of us traders know that we can make a living off of trading, but why is there doubt? Like, what is the doubt? Like, why is there a doubt? Like, where does this stem from? And it comes from uncertainty. Like, not the market is not going to deliver where you think it, where you want it to, or where it should every time. Why is that? And then I broke it down even further. Okay, so it's like news, it's manipulation, it's, you know, fucking wars or whatever, or Trump putting out some crazy tariff shit or whatever the fuck, right? A tweet. And it's also us, not just us, but like institutions and stuff like that. Our indecisiveness, right? And that's why sometimes the market will just go somewhere random. and it will rebalance. It's not random, but it will rebalance. It'll go further than it should to rebalance, correct price, and then go to where it's supposed to. Think about the market like a GPS, right? If the market is bullish, right? This is such a good analogy, and I'm like literally happy that I'm kind of going through this. So this is fire. And let's just make the analogy. Let's say the market is bullish, right? Boom, 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 and then we start consolidating, and then we consolidate, and like the market still has space to go to this high. So you're like, okay, like I want to target those highs. So what am I gonna grab here? Like, okay, like I'm gonna wait. Again, this is probably a 15-minute range. Let's just grab this range here. Boom. You're like, okay, like we're consolidating. I want to see price come to a key level, and the market wants to go higher. But then what happens? All the retailers on the short time frame, they're like, oh, this is a breakout. This is a break of structure. Again, we kept going higher. Now we took the low, and now we should keep falling. But that's not how you're supposed to trade, right? You gotta look at the market as a GPS, and whenever you take a wrong turn, the the GPS guides you a different way. It's like, oh, okay, like even though you didn't exit, now you gotta get off at this exit and go the right way. Same thing in the markets. The market wants to go higher. We're just correcting price. You have to understand the bigger picture and the higher time frame. So now, where do you think we're gonna correct ourselves? In a discount, right? Because now you're turning from, like, where do you think the correction should happen? Where do you think the continuation should happen? Where do you think where should we stop reversing? From where? From a key level. And where's that key level? In a discount. So now price is probably going to go higher, right? And deliver to that draw. So you're always focusing on price action and seeing where does it want to go, right? And you're just trading, you're hoping it goes and corrects itself. You think, okay, I am bullish, but I need price to correct itself and give me that retracement. Give me that confirmation that we going lower, we caused a fake breakout in the lower time frame. So you see the retailers getting in, but you're reversing it because you're trading the higher time frame. It's a discount, higher time frame PD rate, mitigation, sweep a sell side, whatever it is that you want to call it. So now you have context, and now you don't fall for dumb stuff of breakouts or whatever. So now when I'm looking at this, I see an uncertainty, right? I see price closing above, and now if I had a 5-minute gap here, I would probably look for some longs, right? But look, price is just going sideways now. So until we break the high and get displacement higher and create a nice range, or we break the low, I'm not going to touch this. Why? Because we're just moving sideways. Price doesn't know if it wants to go up. Price doesn't know if it wants to go down. So we're just accumulating orders and seeing what. So what am I going to do here? If I were to be trading this, how would I approach this? Well, I would approach this in a way of the first breakout. So whatever the first breakout is, I would say that's a manipulation. The first move, I would say that's a manipulation in this occasion, because this is just accumulation. Whatever the first move is, I expect it to be the manipulation. If the first move, let's just say, for example, we mitigate 10 a.m. and then we just break above, then I'm like, okay, and we're going and inversing this gap, I'll say, okay, never mind, like we're bullish here, like this, right? Okay, so that's just kind of how I perceive things, like, and I'm adding context to when I trade. And I feel like if you look at my other trades I would take, and I'm like, yo, like we're inside of this range, like price is not decisive yet, and I want like a clear draw. Like there was trades where like we had discount here, and then we had premium here, and price was literally here, like literally here, and then like here, and then we swept the high, and I was trying to look for shorts, like, and just trade this range. But it is just so low probability because you don't know if we're gonna go to the low or to the high. So you wait for it to inverse, and then you wait for a retracement. If you get it, you get the clear long. If not, what do? You wait for a break above this high, and now what do you have? Most likely a protected low here, and now you want to catch a retracement and a long again, right? And this one where I go, now we get a little bit more into context where like you don't ever want to take the first tap into equilibrium, because we're just tapping into a higher time frame, so you need a manipulation leg. So like this would be the high, and then we sweep lower, and then we go higher again. So like you can add more context to all this stuff, but again, unless there's equal highs and like unless there's a continuation move, then yeah, but like then you can take the first tap. But yeah, like other little details, right? If it's a clean continuation move where there's a clean draw on liquidity still, you don't need to wait for a sweep. You can just, it's just continuation. But let's say the model is done. Like let's say there's a model here. So let's just kind of paint this picture here. Let's just say this model is, we're just kind of like done here. We sweep the high and we close above it. So you never want to take the first tap here because that could be a protect, like we're displacing high, like this could be a protected high in a way, right? So it's like price could still reverse, right? So price will literally go higher here, we'll like literally consolidate, and then what happens? We come and sweep, and then we go to the high, something like this. I wish I could find this example. I remember I took this trade. I took a trade similar to this where we close above the high, we tap, we rebalance, and we inverse the 4 minute, and then we came and swept the low, and then we went higher. I remember this trade. It was something like this. But yeah, yeah, that's pretty much it. Trade recap is done. Again, we kind of went a little bit over context and why we didn't take anything, and we're improving every single day, so I'm grateful for that. I told myself I want to be more process focused and just focus on context and literally just take my trading to the next level because I know I can, and I know I'm a great trader and I know I can do this. So I feel like just providing context every single time is key to profitability, and also like taming the cave brain, bro. Like just don't submit to, just think so long term, bro. If you take a loss, be like whatever, it doesn't matter. Like there's always gonna be another opportunity. Like genuinely, bro, it doesn't even fucking matter because there's gonna be an opportunity, and that opportunity will literally overtake your losses, and with interest, bro. Like you're gonna win and gain so much more. So I just can't wait. Like I'm gonna be patient. I'm gonna cook on this next trade, bro. So I'm excited. Okay. Hope you guys learn something again and on how I personally perceive the market. As always, again, this is not financial advice, just my own personal ways of perceiving the market. And if you guys learn something from it, again, use it carefully. This is not financial advice. This is just my own. I'm just showing my own personal journey with trading and just my own perspective on the market. So with that being said, I hope you guys enjoy this trade recap, and if you guys ended up taking a trade today, put it in the comment section below. Let me know how you did. If you guys have any questions, put it in there as well. Other than that, I'll see you guys in the next video. Peace.